Okay, welcome everyone. We'll start our new unit, which is corporate reporting for strategic business advance. So my name is Anjum Satar and my email address anjum@ukversity.co.uk. Please, if you have any question, drop me email on my email address. I'll try my best to get back to you as soon as possible. Today lesson will go through LO2 as LO1, not LO2, and before starting this unit I'll show you what we're supposed to be learned under this unit. Okay, so of course it's a new unit title which I just mentioned. The unit ensure the student able to examine the corporate reporting from number of perspective, which will look around the corporate report, we look around various different stakeholders, and we look around the International Accounting Standard Board's role. We look around the International Financial Reporting Standard. We look, what impact on these standards on the stakeholders, how these reports, true and fair for the stakeholders, and what ways they can make the right decision. So that all will be focused in our discussion. So today lesson will be focused on LO1, and then we have a two assessment criteria, which is to cover the P criteria, passing criteria, explain important of professional behavior, compliance with the accounting standard, and ethical reporting standard, which we will go through. In the second lesson, LO2, which will look for the reporting framework. Lesson 3 will be able to prepare the financial statements, which will prepare actual statement, and then the lesson 4 justify the recommendation based on the ratio. So we'll discuss financial ratios and how we can make the decision based on the financial. So these are the 4 learning outcomes with merit and distinction criteria. Those will work towards, and that's which we'll go through today's lesson. So we'll start. Okay, so let's please think about, reflect how much you know about accounting standard. Let's discuss about standard. Which standard we are going to discuss? IS1, International Accounting Standard 1. How to prepare financial statement, how to present financial statement, how many types of, anyone knows how many types of financial statement we prepare? Statement of comprehensive income, which is also known as profit and loss. Couple of you know with this word, or with the word income statement. It's the same thing. Second statement, statement of financial position, and this is also known as balance sheet. Okay, third statement, statement of cash flow, are also known as cash flow statement. And the fourth statement of change in equity, or we call equity statement, which shows how much dividend paid, how much revaluation of assets we have during the year statement. So these are the 4 statements. Main purpose to prepare true and fair information to show within these statement to our stakeholder, our audience. That's all the purpose of the accounting standard. That was accounting standard 1. Then we'll discuss all these accounting standard 2, which is about inventory. Inventory means stock. How many types of inventory? Raw material, finished goods, and anyone knows work in progress or work in process. So these are inventory always record at cost, or net realizable value. Net value, this is also known as sale value. So these should be with us. Okay, so that's, we need to be, whichever is the lower, we should record this standard guidance. So these are these standards we'll go through in our lesson, we'll discuss in detail. So that's, is about advanced financial reporting and LO1, which we'll go through other standards as well in a minute. Okay, so this is indicative content, what we're supposed to be learn, professional behaviors. We'll go ethics, PPCIO, popular people chat in office. So is an abbreviation of popular people, famous people, popular people chat in office. So popular people chat in office. To remember easily, so you just remember the word popular people chat in office. So first P is professional behavior. Always we need to treat people behavior or need to be professional competency and due care. It means up to date knowledge. Always we have to do CPDs, continuous professional development, confidentiality. Always we don't need to declare the information to third party without their permission. And last not least is objectivity. We should be not biased, with anyone if we have family relations and all. So these we need to protect, which is ethical standard, which we will discuss, compliance, non-compliance. Understand the accounting body. We know AAT is called Accounting Technician, Association of Chartered Certified Accountant, ICAW, Institute of Chartered Accountant, England and Wales. CIMA is Chartered Institute of Management Accounting, Chartered Institute of Public Finance Accountant. So international accounting standards, which we will discuss all these standards and their criteria. Anybody any question? So there are many standards. These maybe is a bit fast lesson in a way, but a couple of you already learn, and these standard will carry on embedding in our further lessons, future lesson when we'll actually prepare. So I will cross reference. So today will be overall view about these standards, and the following lessons we will discuss in detail these standards. Any question from anyone? Okay, please, if you have any question, you can drop me email if you're listening this recording. Okay, let's all start. Okay, so first we have today assessment criteria, explain importance of professional behavior and compliance with accounting standard. The main aim of accounting standard to ensure we are transparent, the information is reliable, is consistent, is comparable of the financial statement. That's why we have a standard. They do so by standardizing the accounting policies and the principle of national and economy, so the transactions of all the company will be recorded in the similar manner if they follow the accounting standard. So professional and corporate ethics, we need to be profession versus professionalism, which we'll discuss. Public interest, always the key objective of accountant role. And corporate ethics, moral principles, not cheat people, not creative accounting. So a couple of you heard about Enron. What's happened to Enron? Anyone knows what happened to Enron? World Telecom? Enron and Worldtel. Okay, basically World Telecom. Okay, so we need to be look around these, why these companies collapse. And so professional code of ethics, ACCA code of ethics, compliance, all these, will be in our discussion today. Okay, what is a profession? The term profession can be explained as body of theory, where we learn about the theory. That's our profession, which is used to support the public interest. But the professionalism is taking actions to support the public interest. Professionalism means taking action to support the public interest. Profession is the differential by the certain essential definition characteristics. So profession is the body of knowledge. Professionalism is taking action to support the public interest. So profession is a body of knowledge, skills, adherence, common code of values and conduct, and acceptance the duty of society as a professional person. So you work in the wider interest of public. Of course, when you giving earning the profit, not showing that. So you're working for the few stakeholders. So you have to work the wider interest of the public. Okay, so professionalism is the member are seen to be acting professionally or literally having professionalism. Professionalism may also be interpreted more state of mind. While the profession provides the rules that members of the profession must follow, the professional behavior impose obligation on the members to comply with the relevant law or regulation to avoid any action being discredit to profession. So professional behaviors will mean complying with the ethical standard laid down by the professional bodies. Accounting profession over time, the profession appears by taking more of a proactive than the reactive approach. So characteristic body of theory and skills, we need to look around the technical skills such as auditing and accounting standard, acquiring training and education, CPD, continuous profession, adherence to the common code's value established of administrating body, maintain objective ethical standards, acceptance of duty of towards society, professions can be trusted to act, in the public interest. In return, the member are granted qualification and the usage of the title as ACCA. So further reading is linked here, guys, if you want to. So regulatory framework, authoritative statement, how to be types of the transaction and the events. Always we need to be fair, and so we have the UK standard and the international accounting standard. International accounting standard is more about the organized system, as I mentioned in IS1. Okay, so then international financial reporting since 2005, EU quoted companies, including the UK companies, they more focus about in international accounting standard, but it's quite similar and embedding as well. Slightly terminologies can be different. Okay, so what is the International Accounting Standard Board, which issue the standard? The conceptual framework is the set of the principle and the concept the International Accounting Standard believe underlie the preparation and presentation of financial statement. Objective of financial statement. Why we prepare these four types of statement, which I mentioned you under IS1. Provide financial information about the reporting entity, use of existing and potential investor, lenders, and other creditors, making decision about the providing resources of entity. Okay. Uh, International conceptual framework, we always need to prepare the statement that will help investor and lenders to make the decision, and the information which contains should be economic resources of entity, claims of liability and change in the economics of the performance of the company, profit and loss of the company, and the management efficiencies and effectiveness, how many managers, how much bonus, all being declared in the report under the notes. So is a recognizing criteria going concern the company will carry on business as a normal for unforeseeable future. So when we prepare the statement, always we need to be, it should contain these qualitative characteristic about the financial statement. All the relevant information which is capable difference to decision include faithful representation, always neutral, free from errors. And when we look the qualitative, it should be comparable 2 years figures. Timeline is prepared within 90 days when you have finished. Verifiability, what we are saying, it should be actually contain stock and various other assets. Understandability, the language we use, people can understand. Okay, so materiality mean anything which we is a material, we don't need to ignore. It should be in the face of the financial statement, fair representation under the Company Act 2006 as well in the UK. Okay, asset is mean anything, it's you control which will flow future economic benefit. Liability is a legal obligation. Equities. So it's good to know under IS1, these terminology, please. It's good to be read. If anybody any question, I can explain you. We will carry on. Then we're looking IS 38, International Accounting Standard 38, about intangible asset. Intangible asset is mean, which intangible mean you can't see it, it don't have a physical substance, that's called intangible. So goodwill is the asset, patents is the asset, copyrights is the asset. So we should show these in the book of account. How we asset anything we control which will flow. So if you have a goodwill is your asset, because we develop our goodwill, like university, we develop the goodwill, and the goodwill is our asset, and which is intangible. So in our balance sheet we can, but internally generated goodwill is difficult to measure reliably. So we need to be used, if we sell the company or organization, how much people are willing to pay more than our asset and liability. So if they are willing to pay about the more than the net asset, it means the difference what they are willing to pay, that's our goodwill. Okay, as mentioned, internally generated goodwill, we have a criteria which we'll go through in the following lesson more in detail. Goodwill is just you under IS 38 about goodwill. Criteria goodwill, how we recognize purchase if we pay more than the net asset figure, that is our goodwill. Okay. Research and development. So if you're spending money on the research and you develop the formula, but you don't have ability to use that formula and generate actually medicine for suppose in pharmaceutical companies, so that's we need to be. So all the development charges we can treat toward the goodwill, because when we have technical feasibility, intention to complete, asset, ability to use and sell, and how asset will be proved, future economic benefit, available adequate resources, and measure reliably, then it's come under the definition of asset, and we can treat in the intangible asset. Amortization asset value or the goodwill value can be like, the Tesco manipulated the profit, their values decrease, and this way, the asset need to be devalued like a depreciation. Okay, impairment is a loss, the asset value. So we need to be impair our asset when the asset value. So we have three types of value. A couple of you heard about is cost, how much you bought it. NPV is called net book value, or also we call carrying value. Then we have a fair value and economics value. Economics value. So the cost was 100 when we purchased. Net book value we have, or you can say carrying value is 80, because 20% is being depreciated and first year. And if we sell the asset, now we can sell it £90. And economics value, we can only get the print from it is £70. So now we need to be, if we don't have in our book of account our asset value, we'll put in this way, 110 was the carrying value is 100 and the fair value. So asset no need to be impaired, either the fair or economics value, which is a higher. So according to the cost is 110. So asset now, we'll make this is 100, so it make more sense. So that's, if the cost was 110, net book value is 100. So now our asset should be in our book of account 90, because if we sell we can generate it 90. So if we record as 100, we're not telling the true story to the, so asset need to be impaired, it need to be further reduced, or the value of the asset. So that's it. In the economics value, because if we use the asset our own, we can only get the £70 worth of, but lower whichever is a higher between these two, you can impairment. Okay, so that's we can look around, and annual impairment review we have to do. That is IES 36 guidance. So guys, I'll give you further handouts to do more question, and this is refer the chapter number, which I'll give you the BPP handouts. So this is the slide, which we're using. Any question, anyone? Okay, here are given the criteria. We can do the carrying value or recoverable, whichever is a higher value in use, so we can treat asset in the book of account. So then we can revalue our asset and impairment. As I mentioned, IS2 is about inventory. Inventory always record either the cost or net realizable value, whichever is a higher. Net realizable value, cost was 100. Let's say window 98 CD, you bought £200 each, and now in the market, net realizable value, the sale value is only £20. So we should record 20 in our book of account. Rest 180 will goes toward expense, the revalue, because the value of the asset is dropped. So that's the way we need to be. The IS2 is guide us. The IS2 is also look around the inventory, types of inventory, inventory valuation methods like first in, first out, last in, first out, and FCO. Okay, so this is all about IS2. Yes, normally in last in, first out anymore, we're not using in the financial account, but we are still using in the management account. Okay, IS 38 about contingent asset. So contingent mean maybe happen or maybe not happen. So if we have a highly probability, we can treat asset. It meets the definition of asset. If we can use the measurement criteria, what basis, so we can say the provision. If the case against the Google and the data violation in the European Court of Justice, if we have a 60% chance we not going to win this case, and our solicitor said as well. So we should put in the liability because we can show to the people how much damages or how much we have to pay, and that should be we can recognize as the asset. If we can win it and we can claim other parties, so we can treat as asset, contingent asset, and contingent liability, and we can show in our book of account. This is all about contingent liabilities. Okay. This is contingent liability, contingent asset. So please, contingent mean maybe happen, but if there is a highly probability, we can recognize. Otherwise, we don't need to recognize. We simply need to show in the book of account on the notes. Then we have IS 10 events. If the events, if the financial statement is being signed off, then anything happened during that period, we're not going to record in the this year financial statement. We'll put it in the next year, like the last day of if the fire happened and the factory burn out and the value of the factory decrease. So we not supposed to that. So if not being signed off and anything happen, it's an adjusting event. So we need to make adjustment in our book of account. IS 18 is about revenue. We should record the revenue is mean the sales turnover. If anything we are going to generate, we should record it. But if we not provide the services to, like we have a service contract, so if we not provide the services to people, it's not our sale yet. We should proportion it accordingly. Okay, IS 16 is about the property, plant, equipment. So property, plant, equipment, how the asset will be treated, how this is non-current asset, depreciation methods like the reducing balance method, fixed balance method, and asset need to be revalued as well, cost basis, and the revaluation methods, which will, and how we can revalue our asset, on what basis and what criteria. This is all this, the guidance and the depreciation and disposal of asset, all the guidance under IES in the non-current asset register we can prepare in. So in the company, that's come all under IS 16, International Accounting Standard 16. Then IS 7 is about the cash flows. We have three types of activities: operating, financing, and investing. And operating is mean normal activities, financing and investing, where the money came from, cash to investing, financing went out. And there is a method, indirect and direct method is more list, or the less list, do you give, this is to you to prepare the cash flow. This is We start with the profit before tax, and then we do adjustments according to the cash in and out, increase and decrease, what effect on the cash, and we can prepare reconciliation, which we'll go through in the following lessons, please. Guys, if you have any questions, so a couple of you, this is learn about the financial report as well. So that's, we need to be prepared. Okay, so this is we have about the cash flows, preparation, cash from generating operation, inherent and tax investing. So these are all the elements of financial statement which we need to be show in the financial statement. Anybody any question? Yes or no? Okay. Let's will move to next 1.2 analyze the ethical requirements, corporate reporting ethics. What are the ethics? So we discuss about popular people chat in office. Yes, popular PPCIO, popular people chat in office. First is the professional behavior. Second is the professional competencies. Do you care if you want to put in the same order? C is the confidentiality, and I is the integrity, and O is objective. If you are a member of ACCA, AT, or any other, you must have to follow the ethic. Ethic is applicable to everyone to whom we deal, either we are in business, either we are in practice, either we are financial institution delivering their courses. So these are the professional ethics, which is ethics are the principle. These are not rule-based approach. So rules is mean they passed in the parliament. If you break the ethic, this is a civil matter, and you have to pay the damages. But if you break the rule, is the criminal matter that goes in the court. Okay, so next we have, if you don't follow the ethic, are the threads, we need to be in the accounting world, these we need to be minimize the thread. Self-interest, if we have I'm back end, I'm doing business, I'm giving contracts, so there is a self-interest issue can be. Self-review mean checking your own work. Advocacy thread is mean, giving two people's information that can be problem if you giving the advice to one. Familiarity, we know each other, family relationship, that can be our objectivity, can be intimidation. Oh, you will be at risk, we can intimidate maybe somebody not objective, so they are professional. So professional standards we need to be keep. Safeguard always work, need to be in the best interest of public. Information we give to the people, it should be reliable, credible, value and credibility of the profession. That's all as accountant we need to be, and these are all the come under the ethics, so those we need to be look around. Self-interest, when is it happen, like, these are all points we can look around. Gift, family and personal relationship, partners, client, board. So this is high risk, and that can be leads to self-review, can be leads to the problem in the objectivity, can be compromised. That we need to be minimize. Advocacy thread, where the accountant client is the part and the act as the advocate. Yes, and will earn the fees, or provide the advice, and that can create, the problem. Family threat, intimidation. Yes, intimidation can be close relationship, conflict of interest. Two places are doing the things to advise to one, and others can be compromised, And to read further, please go through some case studies. Yes, so just copy this link, and before our next lesson, if you can go through, please, these are all the terminology. So five professional code of ethics, popular people chat in office, five threads, self-review, self-interest, advocacy, intimidation. Yes, so and self-review. So if you go through these, please, so that will help us, And IS is IS1 we discuss, IS 38, IS2, IS7, and IS10. So please, if we can, IS16, if we can look around these, uh, that will also help us, when we prepare the financial report. So that's all today lesson. In the next lesson, please make sure you join if you're listening this recording, and they will discuss, our LO2 thing. And hope so speak you all during our next lesson. Thank you. Bye bye.